Well, ladies and gentlemen, you know it's a bad day in the market when they halt trading on the Toronto Stock Exchange just before 2 p.m. and the weather looks like this. But taking a look at the entire sectors today, starting with the S&P index down 3.21%, the Dow Jones down 2.8%. Looking at some of the ETFs, the Vanguard S&P 500 down 2.7%, the Vanguard small cap ETF down 2%. We got your probably more favorite ETF, your Dividend Appreciation, down another 2.45%. Some of the individual stocks getting just slaughtered. Carnival Cruise Corp down over 20% in just the last 5 days, almost 4% today alone. You got Uber stock taking a hit, down 4.15%. Your favorite Virgin Galactic to the moon, this wonderful company that's been on everyone's mind, down 20% today. And of course, Tesla Maesla here down 12.17%. And as they say, the markets can stay irrational longer than you can stay solvent. So today I want to talk to you about what I'm doing with my six-figure stock portfolio. And I want to talk a little bit about margin and, trading options and what people are doing out there with all this fear driving the market. So ladies, gentlemen, let's jump right into this.
Drop it.
Welcome back, my passive income investors. And let me start off by saying that we're heading into what I call a fear-based market. And this was a correction that was absolutely necessary. And I'm not saying that the markets were overvalued. We were definitely sitting at higher premiums. And I thought we were going to be heading into bubble territory because there's so much frothiness and greed out there of people watching the markets go up 20, 50%, 100% on some of their individual holdings, leading them to take out margin, debt, all kinds of weird stuff to think they can keep getting these massive gains until finally, reality backhands everybody into how the markets are actually supposed to work. And again, the markets will be more irrational than you can remain solvent always. So I want to go over some of the specific psychological things that are going on in the market, how I feel about it with my six-figure stock portfolio, and where I think things are headed from here. But let's talk about the bad news first. Bad on bad on bad. And usually what happens when things like this happen is the markets will overcorrect either to the upside, but in this situation, it'll be to the downside because we don't know exactly how serious the news that's affecting the economy right now is going to impact these individual companies. We'll learn more as first quarterly earnings start rolling in, and we'll see what companies are directly affected by what's going on here. I mean, we're going to see companies like Carnival Cruise taking major hits. Companies like Apple might be taking a ding. But on the other hand, I think there's companies out there like Facebook. We have the utilities still doing incredibly well. But what's going on right now, guys, is we're going to get a huge fluctuation in what I think is margin calls. So essentially the way margin works is you can open up an account where the banks are basically going to loan you money. Robinhood allows this, and they allow it to a certain extent. And what'll end up happening is if you end up in a situation like this where the markets start declining, well, they expect a certain percentage ratio of debt versus asset value. And if you drop below it, they demand that within a certain period of time, you add capital to the account, and then that way things will rebalance out. And if you don't, you're going to have to, sell some of your positions, which is what I think a lot of people are going through right now. But on the other spectrum of it, guys, we have people jumping into margin right now. But the idea behind the irrationale of what goes on that I'm sure we all experience is that greed versus fear. And a lot of us know that the markets being in a position like this are probably better for long-term buyers like myself, which again, in an interest rate low market here where you can take out debt at 3%, throw it into a stock right now that's yielding 6, 8% even, you could collect half the dividend, put it in your pocket, and put the other half toward the debt. And with this cycle going on, I think we're seeing a big mix of the two here. We're seeing both of these things go on within the market. We all know the typical saying, guys, that time in the market is better than trying to time the market. And in somebody that has a six-figure portfolio like myself is definitely feeling the pain. I mean, we're talking about drops in my portfolio, the 5-figure level, which I'm going to break down in a video tomorrow when I analyze my portfolio. So consider slapping a like and subscribing if you guys would like to see that. The idea behind cost averaging, and if you can stick to a dedicated plan like this, it's going to allow you to set your fear and your emotions aside. But you're going to be going through this cycle, as I'm sure everyone, including myself, has been experiencing, questioning whether they should try and find up with a way of getting more capital right now to dump into the market. And it's not about rushing into this, guys. This stuff usually takes a lot of time to settle in. So in the meantime, I'm going to continue to cost average into the markets as my dividends come in. I'm definitely going to find places to reallocate them. I mean, look at the yields right now on banks. Everything right now has just been in the toilet to the point where it's getting a little bit overboard because we just don't know what the future holds. But if there's one thing I've learned about the market, when things get bad in the market, they get like 10 times worse. The emotion behind it feels like it's always tenfold, and same on the upside. Like it's usually one way or the other, but right now is a way to benefit as a dividend and primarily a long-term investor. So if you continue on your cost averaging endeavors, don't worry if you already invested. I bought stocks like a week or two ago that I'm seeing decline massively right now, and I'm hoping the markets actually continue to downcline because I look forward to buying stocks this year. Now, where do the markets go and how long is this going to last? Well, first of all, if we can look back at some of the other stuff that happened in the market, typically when these things reverse, they reverse very, very fast, which is why you want to continue to cost average in and not set money aside, because we don't know how this turns out. If somebody comes out with a cure tomorrow and they announce it, the markets are back to where they were. But for as long as there's new cases coming out, like the one that just happened in California, I think we're going to continue to see the markets decline. But right now, the degree of the way the stock market is dropping is out of control, and it usually sets off these chain of events where you get margin calls, you get people at fear, people pulling the money out because they're terrified they're going to lose it, people heading into retirement that are terrified they might lose all of these gains that they just saw. They don't want any of that wiped out. So we're going to see what I think is a continued stepping downward in this market. I can't tell you exactly how long this is going to last, and I don't want to be one of those people that says the longer the better, because I like buying at these levels, and I'm looking 3 to 5 years out. On my current dividend plan, I would like to get my dividend portfolio to the point where it's making me, say, $1,000 a month, and I'm trying to selectively handpick some decent growth stocks. But what you want to try and avoid at this point in time, guys, is over leveraging yourself into high risk, low cap companies. At this point in time, I'm pretty sure you're confidently aware that low cap, high risk companies, those companies like I was showing you, like Tesla, all these other stocks right now are going to be getting hit real hard. And when you watch people like myself, people out there like PPCE and financial education, we watch these guys make these kind of high risk bet on these low float companies that look like they're on sale. But the problem is a lot of these guys already have super solid portfolios built out with some of the best companies in the world. And the reason that I'm not overly terrified of this is because of my top tier companies, because I obviously hold companies like Johnson & Johnson. We got companies like Apple, Microsoft. I own some of the biggest banks out there. I own some of the sin stocks, which I still consider to be a lot safer than most stocks during this time period. And these are the kind of stocks that you can rely on in horrible periods like this. These are the stocks that ride until you die. Like, they're going to be around generationally, and these are the little hiccups that allow you these opportunities to get in. The problem is they're not sitting at fair valuation yet. The low cap companies, the ones that are high risk, that people love to think they're going to get rich off of, that load all their money into them, not realizing that leverage is always your worst enemy, and you want to be diversified. I mean, Tesla in my portfolio right now makes up something like 5 to 7%. So, I mean, if it's one of the hardest hit stocks, I'm not really going to feel it to any full extent. I'm comfortable. Like, I'm sitting here not worried, while the chicken coop and the peanut gallery are completely losing their marbles right now. I'm sitting back quite comfortably, looking at the paper losses that I'm experiencing. But when I look at my cash flow, it just keeps coming in. I have some really high yielding dividend stocks that I am considering even buying back into. Like, I thought I was finally done buying, but I'm honestly considering re-leveraging into a lot of my big companies, especially some of these REITs out there. I've been desperately waiting to see REITs take a big pullback, and this looks like it might be the opportunity for me to start cost averaging in this year. Now, honestly, guys, what we're going to have to do here is just sit tight, collect some capital, look for those stocks that you love, make sure they're safe and stable. And again, I don't think these top tier companies are on any major discount right now. I'm hoping we see maybe another 5 to 10% downside on, say, Apple, Microsoft. I'm loving watching Facebook trash right now, because as Facebook drops, man, I just think it's one of the most undervalued top tier companies currently available. So I definitely plan on picking up some more shares on that if we can stay below this $200 mark with Facebook. But right now, I am just sitting tight, collecting my dividends and not really worrying at all. But I look so forward for tomorrow when I actually look at my portfolio to release to you how, because I think I made a video a little while ago where I was down, I think like 8,000. Well, we're down a lot more than that right now. I mean, most of my gains are getting wiped out from the year, but that's all on paper, and I'm not a trader. Many of you guys know this. So I'd love to know what you think in this comment section below. Are you guys trading any of these stocks? Are you using margin? Are you getting a little bit greedy right now, thinking that you should be pulling as much money as you can from your savings and throwing it at the market? I'd love to know what you guys think, and it's going to be really interesting to see how all of this news pans out over the next few months. But just sit tight until we get to first quarterly earnings, and if you're going to be buying stocks from now until the first quarter, look for those solid companies that aren't going to experience any real downside on their books. Again, those companies like Carnival Cruise, though they may look like they're on a major discount right now, you want to wait until they have a bit of a turnaround, because again, it's hard catching a falling knife unless you have a really long-term perspective in mind. But in my opinion, I would rather wait to see when the stock starts coming back, pay a bit of a premium to get in it when it starts rebounding, then try and catch it when it's in free fall. Just my personal opinion, but are you making money in the markets right now? Because you might be one of the few, but I feel real bad for anybody that had like 1 day short call options on the TSX today, because you ain't going to be finalizing that. You're not going to be closing those calls right now, guys. It's some pretty incredible stuff, and it's going to be fun seeing what's going on tomorrow. So stay cool, stay awesome, and I'll check in with you tomorrow.